everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take, so you'll want to manage risk in a way that makes sense for you. We'll go over some ideas in that regard as we go through some potential trade simulations. You'll see that in our order window on our web trader and in our app, there are risk calculation features that help with the risk management side of things quite a bit. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log in the upper right-hand corner to our web trader. The same functionalities that you see in our web trader are also in our app, whether it's the free signals coming in, the market buzz, the economic calendar, etc. You'll find all of those features in both places. And what's nice is you can trade on your MT4 and MT5 accounts from either location. Now, from within the web trader then, once you log in, we can find all of the different tools that we might be looking for. Now, we'll focus more today on the technical analysis side of things. We'll look at some of the technical signals, maybe draw some of our own technical lines, but we'll spend less time on the fundamental news features, but they are in the platform, and in tomorrow's session we go over the fundamental analysis features a bit more in detail. Now, before we get started with the technical side of things today, we should talk a little bit about the fundamental news situation, because it definitely is relevant as to how you might interpret the technical side as you start to look at the trends and such. Coming into today, there's a lot of tension, maybe excitement from some, fear from others about the tariff situation. I believe it's 4 p.m. U.S. New York time, East Coast time, that President Trump in the U.S. is scheduled to speak and make what he's calling his grand announcement about the tariffs. He's viewing it as a really positive thing. Obviously, there's a lot of fear involved with the markets when it comes to tariffs and potential trade wars. I guess from the Trump administration, they're calling it reciprocal tariffs. If others take away their tariffs, then the U.S. won't charge tariffs. And the idea is they're trying to even things up with the tariffs that the U.S. has already charged. How much of that is 100% true, I don't know. They really haven't put out a list of tariffs, exactly what they're going to add at what level, and what that is in response to in terms of tariffs that are already being charged to the U.S. I'm not sure that it really will match up number for number that way. That's probably why those numbers haven't been put out. But in any event, I've been hearing some inklings in the past few hours, and you see the markets responded after initially selling off in the futures. As the futures market opened overnight and through the morning and afternoon, we saw a sell-off on the major indices. And then when the U.S. market opened, we saw a rebound all the way back up, even the U.S. indices moving into the green above the futures open price. And you're thinking, well, why would that happen? And there's been some rumblings that perhaps the tariffs won't be as high as some are thinking, that there's going to be maybe tariffs that rather than 25% might be 10% as an example, or instead of 25, 20 or 15. We don't know for sure, but there seems to be a little bit of optimism that maybe it won't be as tough as what was first anticipated in terms of the size and number of tariffs that might be implemented today. But we'll see. I fully expect that as it gets closer to 4 p.m. New York time and President Trump speaking, that a lot of that fear that was there early morning and leading up to the U.S. Open, I think some of that fear might come back, because you just don't know for sure what he's going to say, what the exact policy implementation will be. But we know something big is coming, and that's for sure. So with that as a backdrop, now we can go in and start to look at different instruments that are moving. How do we think they might move the rest of the day, etc. And it makes sense to look at something like the S&P 500. Okay, it's a U.S. index. It's obviously affected by U.S. tariffs and the U.S. market in general. And if we take a look then we're looking at 2-hour candles here. The open price is somewhere right about where we are now, just below. Okay, U.S. open somewhere around here. You see we're above the open price, but not by much. Okay, we go to 15-minute candles. Here's the drop off. We see resistance here, and I could go just a little higher with that resistance. Okay, you can see here resistance, resistance, corresponding close to today's open price on the open of the futures market, I should say. The open of the U.S. market was right down here. Okay, 4:30, or I'm sorry, 9:30 New York time. And as soon as the U.S. market opened, right back up. And look where it stalled, just past the day's open, the futures market's open, and then responding to this resistance after temporarily breaking it, responding to that resistance level. So if I was going to trade off of technicals and what I understand about the fundamentals, I'm probably shorting this. Why? Because we know that the reason this big crash earlier today, we know why that happened, because tariffs are coming and no one knows what it will be. Why did this come back up? Oh, some optimism that they won't be as bad as expected. And then responding right at the resistance level. And as we get closer to the actual speech and announcement, what do you think might happen? The fear might come back until we know more certainty. It's uncertainty that the markets don't like. And right now, it's quite a bit of uncertainty about who will get what size tariffs. And maybe that'll be cleared up by the end of the day today, but that's not for several hours from now, okay, about 4 hours from now. So I think we've got 4 hours for this resistance maybe to be respected a bit. It was tested once, it came right back down, and it looks like it could push back down towards where it was at the open of the US market down here today. Not that it'll get all the way back down, but this is the technical setup, and we've dipped right back below this resistance level. So I'd be looking at sell, take profit. If I'm going to draw a line, I think I'd like a take profit somewhere before the day's low. So maybe here, because this was a little support level where it hit yesterday and bounced back up, okay, or earlier in the day and bounced back up. So what we can do then is start to set, okay, if stop loss is above this high, above the resistance and above this high that it just spiked up to. So what do we have to get above? Oh, above 5,700, maybe 5,710, 5,715 to get up here, okay? So stop loss, 5,715. Take profit, I'm putting here 5,626. Okay, 5,626. That's right at this little support here and not the low point of the day. Doesn't even have to get there. Now what I'm looking at is about 3-to-1 ratio, not quite, but almost 3-to-1 ratio, potential profit to risk. Okay, that's if the stop loss gets above this high, then I take a small loss. Now, once I have the technical set up and I know my stop loss is up here, has to go to a new high for the day to hit my stop loss, does not have to reach the low of the day to hit my take profit. So it's an opportunistic entry point from a technical perspective. Now I can adjust my trade size because maybe I don't want to risk that much. So now I adjust my trade size and I see 587. Maybe I want to risk about 500 or so. That would be 1% of my balance. Whatever is proper for your risk tolerance. So now I'm at 363, maybe 0.2 is about the sweet spot for me. That's just under 500, so under 1% of my balance to try and make 1,300, which would be more than 2%, 2.5%, something like that, risking less than 1%, okay? If I like the setup, then I'm good to go and make my move. And I know I'm risk managed in a way maybe that makes sense for me. And I've got the technical analysis maybe makes sense. I've got a resistance level here and a high of the day that it would have to break above for me to lose. For now, it's trying to respect this resistance level, but testing it. And we'll see if it retraces the drop that it did earlier today before this bounce back up. And this might go up and hit your stop loss, and you could always re-enter if then it goes back down below another time below this resistance level. Goes up, hits your stop loss, maybe it comes back below again, and you re-enter a second time, right? The same setup, I could be right 50% of the time or 40% of the time with this type of setup, and I would still be profitable, okay? Now, what else can we look at? Gold is always something that's interesting. And we can use our technical signals as well. So, if I want to look at the signal, just click on this little symbol here. Anything with a signal has this little symbol next to it. So copper and the gold futures contract that doesn't have a signal, but the spot gold does. We can click on that and see, well, what's Trading Central think? Makes sense. Fear about tariffs. Perhaps gold could go up further. It's been on quite a tear. So we can take a look and see. These are old highs that were broken through. We were doing a step method here. And boy, was that working. So we said resistance level, if it breaks above, have a pending order to buy. That was a winner. It produces a new resistance, put a pending order to buy above that resistance. If it breaks through, it goes to the next and the next. And so we had steps where if it broke through the resistance, you have pending order to buy, and it just kept breaking the resistance levels and winning, 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 winning. So what are we looking at here now? On the 2-hour candles, we've got a little bit of a pullback here, a bit of a support level that formed down here. Okay, support, 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 and up it goes. Support being defined as a price that it keeps hitting and not breaking below. Tested it once, right back up. Tested it again, right back up, and again held, 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 and up. So it looks like gold wants to try and push towards this all-time high, and we'll see if it can break the all-time high. So if you were buying on this and putting your stop loss below this support level and you take profit up here, that's about a 1-to-1 risk. And that's in line with the directionality of the signal, okay? The signal's looking at maybe a take profit at 31.35 to 31.49. So up to this all-time high is the take profit zone. So it's the same thing we're looking at here. Looks like a nice support level that's held. There's certainly reason for fear on the market with the tariff announcements coming. And so it's possible that gold, being a safe haven, could push up towards its all-time high before it would go down and break this support level. Okay. And so I don't disagree with this signal. I think the fundamental news helps to back that up a bit. I don't think the entry point is perfect here. I'd rather have caught this a few hours back. If the webinar was earlier, it would have looked better, closer to the support level, and so we could have risked less and had a larger potential profit up to the resistance up here. But it doesn't mean that it's a bad entry point. Okay, if you, for example, wanted to buy on this, you certainly could. Let's say you want to buy, but you don't like the entry point. You don't want to have to put your stop loss so far away. So maybe you use something like AvaProtect and you say, okay, maybe it pulls down before it goes up. I don't know. I'm going to give it 1 day or 2 days protection. I'll lower the size of the trade. Okay, and with this size trade, now what I'm looking at is a cost of around 1% of my balance. So we see almost exactly 1% of my balance. You can adjust the trade size and the cost will go up or down based on the length of the protection and the size of the trade. And so for about 1% of my balance now, and you could risk whatever amount makes sense to you. I'm going after if I go to the take profit of 31.48, okay, I'm going after 450 profit with no stop loss needed while I'm using the protection. So it's about a 1-to-1 cost for the protection and possible profit. So about the same amount I would risk if I put my stop loss down here, except now I can wait 2 days. No matter how far it goes the wrong way, I can wait it out for the protected time period. So that feels like a better deal than putting a stop loss down there. But I think I would want to go after a larger take profit because I'd have a small loss in this situation because I pay the protection up front. Since the announcement is just a few hours from now, what you can do is say, okay, I only need 6 hours protection, or maybe I only need 3 hours protection. Now the cost of the protection is about half or almost maybe 60% of the potential profit. So this is a unique way to protect. But for me, the benefit here, the possible profit to the all-time high just isn't enough to justify using AvaProtect in this situation. So in this case, I would pass on AvaProtect. It is an option if you think the cost of the protection maybe is a lot less than the potential profit. In this setup, it wasn't. So then I can start looking at using a stop loss, which would be, I think, down below 31.08. So I'd be looking at 31.05 maybe for a stop loss. And that's a bit more than 1% of my balance risk, 1% being 518, but it's close. It's not bad. Now, my potential profit is still less than my risk, but I don't have to pay this up front. So if I go and win on this trade, I'm in overall profit because it's not like AvaProtect where I paid the protection up front. So even though the risk is higher, I still am in overall profit if I win. Okay, I'm not paying any protection up front. And so I think this is a better setup with this short of a distance to go with a stop loss rather than AvaProtect. If we were looking, at a price point at 31.80 or 3,200 on gold, then it might make sense for AvaProtect because your potential profit would be a lot better than the cost of the protection. But right now, I'm shooting short-term move without having to break the all-time high, almost equidistant to where I'll have my stop loss and where I'll have my take profit. With the take profit maybe just a bit further away. So what we could do is say maybe I think it'll break the all-time high if it does go up and challenge it. So you could cheat this up a little, maybe 31.60, and you start to get a little bit better possible profit compared to risk. And 31.60 is not that far up. It's right here. So if it is going to go rushing up and challenge the high, if it breaks it, it might easily hit 31.60. Okay, it's not that far away, and that gives you a little better profitability compared to possible loss. Okay, so that's an option with gold. Why am I making this type of potential move? Because it feels like there's some fear in the air with this tariff situation coming. So what we're looking at is in the open trade section, we can look at where our stop loss and take profit are. So when you look at your open trades, and you can adjust them right from here as well. Here's the stop loss. Okay, that's the trade we just opened on gold. Stop loss is below this support level that we drew. So we put it in a good spot if we want to be below that line. It's below today's low. And then the take profit, we just drag the chart down a little, we see the take profit here, okay, just above the all-time high. So a little bit further distance to the take profit, shorter distance to the stop loss with the support level protecting our stop loss. It would have to break today's low or this support level to get to that stop loss, okay? But it's up to you. You can adjust this take profit to where you think it makes sense. If you want to take a profit without having to break the all-time high, then you would put your take profit here. Okay, and so you just drag it down and now it's adjusted. This was the secondary line that I drew up here, but the take profit line is here. I'll move it back up just because I think if it does get up here that it might break through. It's a possibility. Okay, any questions? I'll pause for a moment. And we could take a look at a currency pairing. And we can look at the signal as well. Okay, it's, I think, similar situation when we're looking at what happened with the movements today. An initial strengthening of the US dollar, pulling the euro down. US market opened and up goes the euro. US dollar weakened as the indices recovered. So too did the euro against the US dollar. And now I think we've reached an inflection point where we've got a resistance level. Remember, the US 500 broke above that resistance and then came back below. Same thing. Here's the resistance on the euro USD. It temporarily broke above it and then right back down. Now it looks like we're heading back towards where we were earlier with all that fear leading up to Donald Trump's tariff announcement. Okay, there's no guarantee of that, but that's what it looks like to me from a technical perspective. It was a false breakthrough of the resistance and then right back down. Okay, so if you're reading the tea leaves here from a technical perspective, this looks like a sell. All right, because it broke back below this resistance. After breaking above, it's back below, so this becomes resistance again. And that really looks like it wants to reverse. There's no guarantee, obviously, but that's what the technicals look like right now. So take profit could be down here at, say, 108 flat without having to get to today's lows. Stop loss could be, it would have to break back above this resistance. So 108, say 70. Stop loss 108.70. Okay, it's better than 3-to-1 potential profit to risk. If I want to risk only, say, that same general amount on my account, okay, if I do 4 lots, I'm risking about 600, so maybe 3.75. Okay, now I'm risking just over 1% of my balance, 3.7, 3.6. Okay, 3.5 is about the sweet spot. So I'm at about 1%. It's changing because the market's moving. Potential profit, almost 2,000. Really nice ratio, potential profit to risk. Opportunistic entry point, if I like this resistance level here, which I kind of do. It's always nice once it breaks through and then comes back to the other side. And the fundamentals seem to be in the direction of downward movement. And we've got the technicals on our side now, opportunistic spot to do that. So everything's set up, risk, potential profit, the way that makes sense for me. And then I'm good to go to make that move. Okay. So we've diversified a bit. We've gone with a commodity. We've gone with currency. It looks like that index move already lost. Remember, I said I thought it might before the reversal might come along if it comes. So it's still testing this second resistance level here. And so we can go zoom in on smaller candles and take a look. And what we can do, this was our resistance level here, down here. Okay, this is a secondary one that we drew. It's testing the secondary one. So in this case, remember I said it might come down, go up, hit our stop loss, and then come down, and then that might be the move, if indeed it's going to come down. So if it's going to come down, then it would hit our pending order. This is another way to do this. So we could say execute if the price hits, let's say 56.90 below this level, back below this old resistance level. If it drops back below there, 56.90, that would establish the downtrend again. So if indeed it drops down 56.90, take profit down here without having to break today's low, say 56.30. So not being greedy, doesn't have to break the low of the day, just get near it. And stop loss then, if it triggers down here at 56.90, then my stop loss can be back above where it is now. So 57.05, above both of these resistance levels we drew. So 57.05 for stop loss. Okay, so going again, almost 4-to-1 ratio here, or exactly 4-to-1. 2,100 profit, only 525 risk. That's about 1% on my balance again. Going after about 4% profit, and it will only trigger if it breaks this support level and starts a downtrend. So now we've got that pending order ready to go. And I suspect this time, if it breaks down and triggers the sell, it's not going to so easily go back above both of these like it did the first trade that we attempted. Because when we attempted that first trade, it was still uptrending. In this case, it'll have to confirm a downtrend to trigger our pending order to sell. Okay, be interesting to see tomorrow how those work out. We've got gold moving in our favor as a safe haven up. We've got the Euro USD just getting started. We'll see what happens with that and if our pending order gets triggered. So the point that we're kind of doing here with the strategy today is trying to read the technical analysis, using the signals as a guide sometimes. The technicals are there for you, but then also trying to align that not only with the opportunistic entry point from a technical perspective, but also trying to be in the direction that we think the fundamental news will put the wind at our back for the trade, okay? And we'll see how this works out. I'm anticipating maybe some fear hitting as we lead up to 4 p.m. New York time, as Trump is about to make his big tariff announcements, but we'll see. You know, again, I'm managing the risk, putting together as many tools as we can to create the strategy that we're using today, and trying to go in the direction as you can best read what the fundamental news is, and using the technical analysis to help determine entry point, exit point, whether it's an opportunistic trade to make or not, etc. Okay. All right, everybody, thank you for joining. This is a good place to stop. If anyone is available to come tomorrow, my session's at 11 a.m. UK time. All right, everybody, good luck with the trading this evening if you're still trading. I think you have a lot of opportunities. Okay, bye for now.